Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Hey, good morning. Sorry I'm late. I keep spending too much time making breakfast because I'm trying to eat more. Needs some work on my method, I guess. But hey, we just had some news here. U.S. initial jobless claims. 216 versus an expected 233. As a result, the treasuries have sold, and they're actually pushing into new lows, in fact, here. It kind of looks like it's already further than I can touch. Okay, Commando, I think I see your question. I think I know how to answer it. Let me go through the charts first. Okay, so here is the treasuries. You can see we had a pretty aggressive move down. Well, I wouldn't say that it was like a super aggressive move down, but on those service PMI numbers yesterday and now here today on the jobless claims, we are getting slammed down again. S&P 500 on a multi-day losing streak yesterday was a little bit more extended because of that PMI again. Here you have oil, though, oil continuing to push higher. And so even though the economy is kind of like not doing as well, we've got oil pushing higher. That makes stagflation even, well, let's not say more likely, let's say even worse. Yeah, not a good look here. Gold and silver getting pummeled as well. And Kappa also not looking so good. So pretty much everything, there is not if you look at my market analyzer there on the lower right corner, I mean, look, the 6J is up 0.01%. Okay, but basically everything is down. Like every market is down. Okay. Bitcoin had a little bit of a I don't know what that was. There was a little bit of a spike and zaniness over there, but I don't know what that was. And the dollar above 105 here now after the news. Okay, so how do you import the levels indicator? Okay, so the way it works is there's a zip file, right? So the way the import an indicator into NinjaTrader is you go Tools, Import, NinjaScript Add-on, and then a little window will pop up here in a second that will ask you to select the zip file. So then you see how these aren't NinjaTrader indicators, but you select the zip file and open it, and it will then import it into your NinjaTrader. Okay. Once you've done that, then when you come into the indicators, there will be a Speculator Seth free folder at the top. And then there will be prior day VP levels is the indicator. Now, the other thing that you have to do for this indicator to work is you need to put the levels into your main folder. So usually if you're on Windows, you go Documents, NinjaTrader 8, and then you put the let's see here, where is it? Oh, do I not put it there? Do I put it in bin? Or sorry, cache. I think you put it in the cache folder. Yep, profile levels.csv. Put it in the cache, the NinjaTrader 8 cache folder. That's how you do it. Never heard of that person, but I am opposed to all forms of technical analysis, including technical analysis with order flow. Order flow is the thing. There are stylized behaviors in order flow, but once you start saying, when I see this certain specific setup, I go long or short, then you're doing technical analysis, and I say no. And there's almost a 98% chance that that's what he's doing. So I got to think back here on the charts. To come back to our volume profile here of ZN. Okay. That was the rollover. That was the non-farms. Oh yes, it was ADP. It was ADP that brought things back. I don't know, man. This is a really odd situation with the treasuries and everything, because the economy doesn't look all that great to me. But then you keep getting numbers that look good. So you're kind of getting conflicting information, but the market seems to be going along with the kind of these softer measures that say that things are still going pretty good. But they're not going good because that's like, so we have to have higher interest rates and the S&P 500 is down. You know what? There's something else that we need to check on today. We got to come over. I like to use TradingView to look at stocks because it's just easier for me to like really, really zoom out, you know? Oh, did YouTube filter out your first message? Oh, I do see the first one. I tried trading the jobless claims, but got screwed for a 3-tick loss. Well, I mean, in the 10-year 3-tick loss, that's not that bad. But yeah, I trade ZN. Usually I trade ZN. But I do not usually trade like immediately as the number hits. That makes sense? So hold on. So let's come over. I had these charts over here because I was like, okay, what has done better, Nvidia or Bitcoin? Well, actually, if you look at Bitcoin was higher at points, but it's actually Nvidia. So like over the past 10 years, what would be the best thing to invest in? It's actually Nvidia. Especially if you could do like leaps. Yes, 10 years ago, buy Nvidia leaps if you have that opportunity. Okay, but what we really want to look at is Apple. And we can get rid of the Bitcoin here. And we can move it over to a daily chart. Okay, it is. So there's been a number of news stories as of late about problems with Apple in China. But today, people seemed particularly unhappy with Apple or something like that. Well, the news story is that China is banning all Apple devices from being used by any like government officials or anything like that. So Apple is down pretty big. That's what I wanted to check. Okay, so how do I trade it? Let me come back to this chart over here to kind of, as we look back to kind of explain. Oops, where'd my mouse go? There it is. Okay. So, when you trade, when a economic number comes out, rather, you're going to get this thing. This bar right here. Okay? Don't trade that bar. Oh my gosh. Crazy stuff happens. Okay? Now, why don't you want to trade that bar? Well, let's just remember the stylized behaviors of order flow, okay? When there is a lack of liquidity, it's easier for it to move through those prices. So, as it moves down, there's not going to be a whole lot of liquidity behind it. I mean, there's not a whole lot of liquidity out there in general, but especially where you just moved past, there's like literally no liquidity. And so they almost always do this thing right here, where they came back 4 ticks. Okay? So you don't want to trade this whole thing right here. I mean, I guess you could try trading the pullback, but that's super dangerous because if they decide to go down further, you can really get slaughtered. Okay? So I almost always wait for that initial little liquidity hole to form before I start trading it. Then, if I really think that the piece of news is really going to continue driving flows, then I'll go for the continuation. And that's usually the way that I trade those news events. But, every once in a while I'll get something where I'm like, oh, this is like in a reverse hard. Then you can trade it back. But I have a video about trading the news, and I would recommend watching that one because I give a bunch of examples of news moves that I traded. Can you demonstrate how to use the levels from the... Well, the whole point was to not use them. Okay, let me show you. I'm going to open a new chart for this, though. New chart. Over here on this screen. ES. 30-minute. 30 days. Tick replay. Okay. I have to load the chart first. Wait at least 4 minutes is my rule. Yeah, well, so if it's a really big one, and I would say in this instance that I would probably consider jobless claims to be a pretty big one. But by pretty big one, I mean that like almost all of the liquidity on the DOM disappears, 1 minute before the news event, okay? If it's one of those, yeah, I usually don't like to touch it until 5 minutes afterwards. And if it's a non-farms, I often wait for 30 minutes. In fact, lately, I've just been steering away from trading non-farms because it's just gotten so insane. Okay. Now it'll take it a little bit to do all of the calculations. Yeah, don't catch an illiquid falling knife. I mean, the thing is that when the market gets really illiquid, you can actually get some really good reads. It's just that the consequences for losing are so dire that, it's often just not worth playing. Okay, so what you get here is this line, right? These lines are basically the prior day's levels. So the point of control for the previous day was 4470. By the way, you're going to find that in the S&P 500 that the close is almost always the point of control. Okay. And then this blue line is the value area high, and the red line is the value area low. So, you know, some of the trades that people talk about with these sorts of things are like, you know, if we open up below the prior day's value area low, that I want to trade it on it going back to the previous day's VWAP. Or sorry, point of control, not VWAP. If we're below the value area low, then I want to trade it back to the prior day point of control. Or if I think it's a trend day, I'm just gonna go short. I think in this instance, you just want to go short. Like the S&P is getting hammered today. We were like what, 44.70? We're at 44.40, so we're down 30 points. And we got to be hitting into some gamma levels because again, the thing has been that volatility has been contracting, despite there being some risk events next week. And so in other words, the equities market is not protected against the downside very well. And that means that if the ball gets rolling, if they get down far enough, then you enter into negative gamma territory where every step they move down, these people have to hedge even more. And it can really exacerbate moves, can lead to increased volatility. Anyways, the whole point of that video was that just because there was some sort of statistical outlier property about a price yesterday doesn't mean anything about what price is going to do today, right? Typically, there'd be some people looking to trade this back to the point of control, but it doesn't matter because the jobless claims was better than expected and the market is hating that, right? So how do you know if it will reverse or not? Like looking at the 10-year, I don't know where I would enter because it's what did you say here? Because it'd screw me over. Well, okay, so a reversal in particular is an odd situation that usually doesn't happen. True reversals are very rare. Like true reversals are just as rare as trend days. On Ninja Trader, every time I switch to 30-minute time frame, it offsets to like 5 days. How do I make it 15 days? Man. You know, these are like all sorts of great questions. So what I would do, it was I would come in here, you change the days to load to be 30, and then down here where it says preset minute, and save it, and save that as the preset. Wick clears me and then continues to move in my... Yes. Okay, so... there's a couple of ways I could approach this. I'm going to just minimize this thing. Okay, so... let's look at the DOM here. Okay, so it's a little bit too late, but you notice the volume profile in here? How it's what we would term disorganized or random. So normally you would get a distribution that's like, right? But in this case, it's just like almost a flat line, right? Which means it's random through there, okay? But there is a distribution here in this area between 22 and 19.5, okay? So what happened was we moved down. There's a limit to how far they can move down because each time that they move down, right, there's liquidity that they have to take out. Meanwhile, there's not very much latent liquidity behind us. So it will reverse on you, right? The trick or the thing that you want to do when you're reading the order flow in that situation is you want to detect the liquidity hole before you see it on the volume profile here. Okay. So the way that you will detect that is you'll get one of two things that will happen. One will be that it will just start staying at a price for a little bit too long. Okay. It'll be like when you come back and you look at this chart right here. Do you see how it's been there at like 22 for several bars? I mean, there have been attempts to kind of like push it out of that, but it keeps snapping back to it. It's because there's low latent liquidity in that area, and it's like a hole in the ground, and you just slide back into it. So you just slide back into it. So unless another flow comes in the other way, I would expect that 22 to become the point of control for the session eventually, because they'll just keep slipping into it. Okay. So one is they're there for a long time. Okay. Two is you just get like really big trades there, lots of volume traded there, or otherwise there's just like low resting liquidity there. Oh, hold on, my wife is here. She was looking for the baby monitor. Yeah, you can send me an image on Discord. My private messages are open. Okay, so something that... So do you see right there at 23? Oh, uh-oh. Okay, I don't need to worry about that. What I'm looking for is a price where the resting liquidity is consistently low. Okay, so like 880 is okay. But, you know, if I consistently see it like below 500, okay, so it's below 500 right now, it didn't tick. But if I see it, it ticks down, and then they only offer like 300, and then it ticks up and they only bid 300, and it ticks down and they only offer 300, and I see that over and over and over and over again, that's the low latent liquidity that we're talking about. It's like even when it comes away from it and comes back to it, it's low. That's that hole that we're talking about. So when you're in a big news move, you'll kind of see one of those areas develop where, you know, it'll reverse, it'll go back and forth across that price multiple times, and you'll see low resting liquidity. Okay, this is an empirically proven behavior about markets that if you want to understand the math behind, I would go and read this study by Jean-Philippe Pouchot about Walrasian auctions to a continuous time auction. And he kind of shows how this behavior leads to a certain kind of mathematical property about order flow called the square root law. Okay. So if I combine this, are you messing with me again, Celine? Is this? Nope. I taught you about the volume profile levels so that you can completely ignore them and know that they don't actually help you whatsoever. Just ignore them. Don't look at them. Don't put them on your chart. People will show them to you and you just be like, okay, doesn't matter. Okay, so this one, it looks like it is going to reverse, though. Although I can't say I know or understand why. Okay, but for the reversal, here's the thing that I'm going to see on a reversal that you got to watch out for. Okay, like let's say that somehow you were able to take the trade a minute after the news and then it continued down and like it's like really running for you, right? Okay. Then you see a liquidity hole. Okay, cool. So I usually want to get out in the liquidity hole because that basically means like price is going to get stuck there for a while. And it might not be, it's usually about 45 minutes before you'll get another wave, another leg that pushes it further. Okay. But when that liquidity hole forms, the market is vulnerable. If somebody comes in and is like, oh, I want to trade this the other way. This is good for me. This is a good price for me. I want to trade it back up. And they start hitting it there, then they will probably retrace the whole move. Okay. This is called the inverse. This is called the inverse sine law. Okay. So if you have a trade, if you have a large meta order, it will tend to follow square root law. And when you get to this area right here, that's where you start to see the low latent liquidity that prevents that. There'll be more and more volume trading it long, but it's not resulting in higher prices. Okay. Once that happens, the guy executing the meta order stops, and then you'll have a post meta order regime change and this is about 45 minutes. Okay. Whoops. 45. Okay. But if at this point right here, an opposing meta order of equal or greater magnitude comes along, because the liquidity is damaged from this whole move, you'll get this. And it will actually move more than the original move. This shark tail sort of thing. That's a reversal. Okay. And what I would see on my chart after the fact, that would kind of tell me that's what happened, is I would see like, okay, cumulative delta declined by 5,000 contracts, but then I saw cumulative delta rise by 5,000 contracts, and oh, what do you know? Even though it was 5,000 contracts sell and 5,000 contracts buy, the buy moved things more because of the damaged liquidity. Okay, so if I'm getting to that liquidity hole area and I'm starting to see signs of them like initiating a position the opposite way, like I'm seeing very aggressive order flow coming in the other way, that's when you get reversals. They haven't been happening as much lately, but they are actually quite common, and you've got to be really, really careful because that's where you're in a position, it's running, and then it comes all the way back on you, right? That's what's happening. And the thing is that it can happen so fast. So you've got to be, especially when you start to see that liquidity hole, you got to be sharp. You got to be watching for it before you lose all your profits, right? So it's really easy to get complacent. It's like, oh, I've got the winner. I can just let it ride, and then all of a sudden it's completely retraced on you. But that's the whole thing, is that because of the empirical properties of the order flow, it's actually a relatively likely thing to happen. So you have to be cognizant of it. But how do you see that it's going to happen? You can just see it in the order flow. And there should probably be a good reason why somebody might want to oppose it. Like sometimes on the non-farms numbers, you'll get this initial knee-jerk reaction on the non-farms number. And then when you actually dig into the report, you see, oh, actually, it's a little bit more nuanced than that. And then that gives them a reason to take a reversal trade. Right? So how do I actually stop getting cleared by a wick? Don't get in near the liquidity hole. Why do you have volume profiles on your DOM? So I want to be able to watch the volume as it develops, right? Like if I think there's a liquidity hole somewhere then eventually I should see that price become the point of control, right? But I'm not looking at the volume profile and saying, okay, because there's a ledge here, or because this is the value area low or high or any of that sort of thing, I'm going to take a trade here, or I'm looking for a certain thing to happen. None of that. It's just how I keep track of the volume that had traded there over longer periods of time. Because what it shows me here in the center only shows me like the last tick. You know, I'm going to come in here when we're making new lows, and then I start to see a liquidity hole. Well, you know, 20,000 contracts is about a normal amount that you might start to see initially trade in an area like that. So it just gives me a good idea of like what the actual activity looks like, what the orders actually are. Because the whole thing here is remember, orders move markets. So in order for me to understand what happened, I have to be looking at the orders. I can't just look at the price movement. I have to be able to see the orders too. And the volume profile helps me do that. But I'm not using it to try and make predictions. You understand? Right? Helps me understand what's going on right now, but I don't use any of that information to try and predict the future, because some sort of strange aberration at us, you know, does not necessarily predict what's good. You know, like the best that we got here is this low latent liquidity. And what is the prediction that that's making? That it's not going to go anywhere for 45 minutes. So does that really make you money? No, it just helps you avoid a bunch of stress from sitting in a position that goes nowhere, right? Or that has a tiny little reversal on you. But how do I predict the future? By knowing things about the market that are going to cause people to submit orders, and knowing it before they submit them, essentially. So I go into the liquidity holes in that recent video on the volume profile. On what column are you seeing a liquidity hole? I'm in the blue and red columns. Not hoping. I don't know. So like the thing is you will go and if you look at anything. So like you're saying ledges will hold, okay? Or you could look at certain moving averages or things like that. You're going to look at it and you're going to say, oh, it worked that time and it worked that time. That must mean it works. But you have to realize that to actually like really prove something statistically here, you need like 10,000 samples. So that it worked that time is completely meaningless. What are the blue and red bars? You mean the blue and red columns? The blue and red columns are the limit orders, right? These are the limit sell orders and the limit buy orders. So when I'm looking at there, if the resting liquidity, the best bid or best offer at a specific price is just consistently low, that's kind of my sign that there's a liquidity hole there. And of course, we're talking about latent liquidity, not just resting liquidity. So you kind of have to see it over time, because what you'll often see is like, okay, it ticks up. There's not very much bid there, but then next time it comes back, then there's a strong bid. You know, I got to see it like there's just not, you know, like a lot ends up trading there over time, but not a lot at any one time. It's just always less than like 500 contracts. Well, I do find this reversal a little odd. So when I'm looking at the flows over here, it's not consistent across the bonds, right? The 5 years still sold. The 10-year didn't really put up much of a pullback, but the 30-year did. Okay. Now, one thing I am noticing is that we got continued flattening. Okay, so flattening means sell ZF, buy ZB. Yeah. So I guess it would make sense that you would see the 5 years sold, but then you'd see more buying in the 30-year. In other words, this pullback and this move back up and everything may have something to do with some sort of a large trade that's being placed on the yield curve. That's what it looks like to me right now. But the thing is that even the 5-year has surpassed what the initial news price is. And the reason, well, and the Japanese yen recovered it. So we might be able to say that it's just currencies. But it might also be that they say, hey, you know, like, I know that was the knee-jerk reaction off of the initial jobless claims, but it doesn't actually matter. Can you show an example of a liquidity? Well, you'll see it as it happens. I don't think we've quite had one on the upside. Although, in this situation, I don't know if you'll necessarily get a really strong one. Well, look at that. That looks like they're just gonna they're just gonna pop it like a pimple. Let's see. Let's reset it and see if it goes there. At the moment, it seems like the buyers are a little reluctant to hit that 28. For you watching the DOM, you'll see it, man. Like once you understand, the key thing is understanding why it happens, right? Good point. Big offer at evens, which was basically like where we were kind of resting yesterday. Okay, there they did decide to trade 28 finally, but it hasn't gone bid strongly. So that's something that we want to know right there, right? A little bit more liquidity at 28. Now, more liquidity at a price means it's going to be harder and harder for them to move up to that 10. Sorry, 110 even. But if the really strong flows are coming in, they'll just slice through it. They'll be like, oh, the liquidity is there. Let's go for it. Yeah, I think we'll probably see a new high. I mean, the buying there was pretty strong. Yeah, everything on a DOM equally means something and nothing. So again, like that liquidity whole thing. So again, what I'm kind of getting distracted a little bit here, right? I'm being ADHD. What causes a liquidity hill? Low latent liquidity. Okay. A lot has traded there, and all of the market makers are like, I've already filled as many orders there as I'm able to with my risk parameters. I can't offer any more out. And so every time that price is there, there's just less people willing to bid or offer on it because they've already taken positions, right? And that prevents it from moving. And then it will just go bid, it'll just go back and forth across that. In the 10-year treasury, it usually is just like one price. It'll just go back and forth across it forever. And you're like, oh my gosh, I've been sitting here for such a long time. Why isn't it going? This is so boring. This is so frustrating. It's because you got in on a liquidity hole. And the funny thing is that you are actually quite likely to get in on the liquidity hole. Because it's you and all your buddies all getting in at that same spot that causes it to happen, right? You all took positions in there. You exhausted the liquidity in that location, and it gets stuck. And if you watch the 10-year treasury, you will see it happen because it does it every day where there's a period like 45 minutes where it just goes nowhere. You watch it, now that you know what causes it, you know that it's there, you'll see it every day because it's not like one of those like, well, there's this, statistical anomaly that I think I found with this one indicator and I don't actually know what causes it, but it seems like there's a 52% chance for it to move this direction after that happens. No, it's not like that. This is an empirical behavior that anytime you see a large order, a large move that's either like one guy just buying a ton or a bunch of people buying a ton on the same kind of premise, you will see this behavior every time. Because it is caused by mathematical properties of the market itself. You'll see it. You open a buy position in the 10-year, which smaller bond? I'm not quite sure what you mean. I mean, if I wanted to take a yield curve trade, I would probably do the 2 and 10. You'll see so much and none of it makes you money. Well, that's, I think that's the funny thing about it is that there's all of these empirical behaviors of order flow, but there's this one big caveat, which is what are the new orders, right? I can see this really huge, like there's 38.55 there, right? Okay. But if there's like 30,000 worth of orders to buy, that market orders to buy coming in the future, it doesn't matter. They're just gonna slice right through it. And the thing that you got to realize is that the size of these large meta orders are so much bigger than the available liquidity. Okay. If these guys went in and traded the whole order all at once, it would just break the market. Like they just can't do it. They have to trade it a little bit at a time. And orders have strong impact. Orders have strong impact. So that's why, even though you will see things that do mean things to some extent, okay? Like if we tick up and then I see a really strong bid behind it, immediately after we tick up, it's 2,000 contracts. That on average means that we're in a good trend and that we're going to continue moving up. It does. It's just that if sell orders come in and they could come in at any time, they're so strong that it's just going to cancel that out, right? So the problem is that these are real edges, but it's just that they're not very powerful compared to the new orders that will come in. That's why ultimately you've got to focus on predicting the new orders. I bet you that greater than 50% of the time those stacked bids or offers pop into the next price and immediately pull. No, that's not really what I'm talking about, though. Like the ones that I'm talking about, like it'll tick up. You'll see 2,000 contracts on the bid. If anybody hits into them, they don't pull at all. I mean, often what's happening when you do that, so I guess the thing to realize is when it ticks up like that, that's usually because the robots are looking at the correlated instrument and saying, okay, yeah, like that's a really solid price for me to bid at now. But, it can change at a moment's notice. But it doesn't mean that those things are useless, right? They're actually very essential parts of being able to read what's going on. Is just trying to base a trade on them is dumb, right? Yeah, maybe there are a lot of times where you get a stacked orders that pop and then vanish. That is true. That happens a lot. But in terms of like, what do things mean? Okay. You got 6 forces. There's market orders, buying, market orders selling. There's limit orders adding on the bid. There's limit orders adding on the offer. And then there's limit orders on the offer pulling, and there's limit orders on the bid pulling. So there's 6 forces. And, you basically watch those 6 forces, and those are all kind of tea leaves to tell you, what is happening at any given time. Well, it's not that it doesn't mean anything, Uzi. It's that it's too small. It's well, I don't know about that one, because the situation that you're describing doesn't happen very often. And if I'm consistently seeing bids and offers stacking on the way down, like big time, that's a really strong dead giveaway that we've got a strong meta order that's going to go a certain way. It's just that most of the if you're not expecting it to happen, by the time you realize that it's happening, you'll already be too late, right? Okay, sometimes the number of traded market orders disappears. What does that mean, or how is that possible? So what happens is, if it ticks down, and then it's been down for like 5 seconds, and it ticks back up, it will reset that column. So if it's been away for a certain amount of time, so it's been more than 2 seconds, you see how when it ticked back up, it reset, and then it was 59. So that basically, it tells you, okay, how many contracts did it take to clear it that time? And every time that, it ticks, and it's been a few seconds, it resets. Right? If you want to see how much is like traded there overall, then you get this volume profile column. Or if you want to know how many buys or sells were there, there's other columns that you can add on Jigsaw that will show you that. Your trade is not any of this market behavior. It's trading so small that you can absorb volatility. No, that's not. I don't agree with that at all. I think that the edge, when I have it, is being able to predict the future orders. I think that watching the DOM and understanding what's going on at that time is a really important component that I need to be able to have enough context to potentially predict those future orders, and certainly to have enough context to know what the current market conditions are, so that when those new orders do come in, I know how it will play out. But ultimately, if there's an edge, it's that I am predicting those future market orders. There's no way around it. Do it with a 4-tick stop? If I did it with a 4-tick stop, I think it would be about the same. Yeah, because most of the trades that I'm taking are I'm taking like a 10 to 15 tick stop on the micros, and that's roughly equal to 4 or 5 ticks in ZN. So it would be pretty close to the same results. Well, when I'm trading the ZN, when I trade like multiple contracts on the ZN, I definitely do take bigger than that. And I have recently taken, so the recent ones where I took bigger losses than that were still 10 to 15 ticks. It was just I had 2 contracts on, right? In fact, so these are my stats for micro treasury yield futures. Okay. So all of my, 117 trades that I've taken this year on my live account. What is the average MAE and MFE? Average MAE is 12. So on average, I'm taking 10 to 15 tick stop. Now, I think I have taken ones that are worse than that, but that's kind of screwing up. Oh, wow. I took one that was almost 75. Really? Yeah, it shouldn't have happened. Or maybe there are some that I should trade break even. I think one thing that happens to me frequently is I get in it, it goes 10 ticks against me, it comes back to break even, and then I go, oh, okay, now it's going to go my way, and probably I should just be breaking it even in those situations. Do you have a weekly or monthly target? No. I just take what's available. Okay, so anyways, if I'm taking a 12 tick stop, okay, and just realize that a micro treasury is equal to like 2.3 ticks in the ZN, or one tick in ZN is worth like 2.3 ticks in the micros. So if I'm taking a 10 tick stop, then that's about 4 ticks in ZN. So if I was taking with a 4 tick stop in ZN, the results should be pretty close to the same. Now, well, it could, but why would I focus on that? I mean, I did that for such a long time. Right? I did that for a really, really, really long time. I find it interesting. They did not, I mean, they did trade 28.5, but there really was not as much desire for them to buy when we got like above the open, was there? You believe that big limit order pulls? No. Well, okay, but that's a question of like where my attention is, right? So like my attention has been 1, trade the micros, 2, on occasion trade sim in ZN and learn how to manage multiple contracts, right? If I were to come in and start, you know, I can't do 3, especially not 2 things on the same instrument. So I don't know if I could really do it that way. If I was trading multiple contracts over here in the 10-year and I was feeling really comfortable with it, which I still don't, to be honest with you. I still feel like I haven't completely sorted out when I should and should not be taking multiple contracts, when I need to reduce my size. I think I'm still figuring that stuff out. But, you know, if I was comfortably trading multiple contracts over here, then maybe I could switch over to only taking a 4 tick stop over here. But okay, so there's this idea or theory out there among people that the market is attracted towards where the liquidity is. And this is just not true. What moves the market is people buying or selling. Right? If the market moves up, it was because there was net more aggressive buying. Of course, the number of buys and sells is the same, but those buyers, they were willing to cross over, use market orders, and aggressively exhaust all of the offer side liquidity and push us through. That's why we moved up. And if there is a lot of liquidity in the spot, then sure, as we, like for instance, 110 even, there's 3870 right there. 3870 is the most that you see on the DOM. Okay. So the idea would be I should go long because we're going to go up to 3870 to 110 even, right? That's the theory. And what I'm saying is, that's not what happens. What happens is maybe there's a large meta order to buy out there, and they're going to buy it up. And then as they buy it up, you know, there's going to be more liquidity at 110. And so it's going to be more difficult for them to get through that price. And so then you'll find that, oh yeah, like it did settle there at that spot. But it wasn't that they were attracted up to that spot. It's that the net imbalance of orders for that day was long. Harker's Beach at 10. You're correct. How many times do you watch prices go up on a negative delta? Okay, so if a price, so first of all, in treasuries, very rarely. In treasuries, very rarely. But in treasuries, if you're seeing a move like that, it's probably because either something's going on with the spread or something's going on with the dollar, right? Correlated instrument. Yeah, when you watch the micros, the limit orders move where the LP. I think he meant to say MP or MM. I don't. Liquidity provider wants to move them. No, when you're looking at cumulative delta, to see cumulative delta be long and the 10-year move down almost never happens. Happens in ES all the time, but it almost never happens in ZN. I have seen it happen before, but it's very rare. But again, what you're saying about the liquidity providers, so this goes back to, okay, how does the liquidity provider work? Well, talking about ByteBar and I guess you're talking about something that I'm not, like some metric that I'm not watching. But remember, how do the liquidity providers work? Well, they're going to be looking at correlated assets, and they're going to say, okay, this correlated asset moves, so my best bid and offer should be this based on that. And they set what their best bid and best offer is based on correlated assets or statistical arbitrage kind of edges combined with what their current inventory is and the current volatility and so forth. Okay. So they will adjust their best bid and offer based on that correlated asset. And so, yeah, you can totally see an ZN move on very little volume, if not like the opposite volume, because what's actually moving is the dollar or the Japanese yen or whatever. And, the people over here in the ZN aren't actually trading it, which is why you've got to watch the correlated assets. Yes, their inventory. No, but that's that's not true. Because again, it's their inventory is kind of a part of what creates the liquidity hole. So we actually can kind of see that stress, and then as their inventory, gets used up, you can see the change in what they bid and offer. So you get plenty of signs about what the condition of the market maker's inventory is. And that's a key part of what are the current conditions, right? Zambersley? I would say, like, right now in this at this spot. Okay, so there appears to possibly be a liquidity hole at 25.5. But overall, I would say that the market maker's inventory is just fine. Probably very much so because we had like a complete reversal and the market makers love that shit. But I'm not seeing any kind of stress in the liquidity providers whatsoever in the treasuries right now. I do potentially see it not going anywhere for a while. But I do track them, Uzi. So what we do this is what we do every day is I see the move, I identify the liquidity hole, and then I say, okay, we don't touch it for 45 minutes. Why don't you map them out in the comment column on the DOM? Because when the liquidity hole happens, that means it's not going to move for 45 minutes, right? So I don't need to track it because it's just going to be where my DOM is centered at. I just recenter the DOM there and I know that the DOM is still centered. And then after the 45 minutes, it doesn't matter anymore. So like, why would I want to have it on my alert column? It doesn't matter anymore. We don't perform technical analysis with liquidity holes, if that's what you're saying. Once oil is over $90 a barrel, we'll all be oil traders? You think so? I don't know. I think I got burned hard enough on oil last time that I'm just not going to touch it. I feel like that there are too many vested political and business interests in messing around with oil for me to be able to make very good predictions over there. Like I think I could play oil from like a long-term perspective, but I'm not sure if I'll ever be up to day trading it. Did you notice NT dropped their... Really? No. Why did they do that? And I haven't looked at my email today. Because I'm not sure if I get those emails for Ninja Trader anymore. Made the mistake of giving my email to a marketer, and I'm already getting emails about their product. I do want to buy it, but I don't need emails every day about it. Thank you very much. Yeah, no, I don't think I get the Ninja Trader ones anymore. I still get the AMP ones. They need to cut the ZN margins in half. I think the time will come where they do need to cut the margins, but I don't think that it's yet. If we have a soft landing, quote unquote, and we're into 2024 without any problems, and I would expect volatility be very contracted, and then you probably could raise margins on things. But to Octavius's point, I do think we could get into a regime. We could be soon moving into a regime where oil moves and everything reacts to oil. Maybe that's what he's saying. I think so. I think we could have days where it's, oh, oil is rising, better come and sell the treasuries. Could happen. In fact, I think it's a likely. I gotcha. Yeah, I think that is actually a very likely scenario here at this point. I'm kind of wondering. So my issue right now in oil is like, in the past I've played that with like I did options with that one. I don't think in this situation that I know enough to be able to play things on the options, and the prices that I'm seeing on the options are already pretty reasonable. It wasn't like the situation last time where it was like, dude, oil is gonna just skyrocket here and nobody's paying attention. It's not like that. And so I feel like being long oil would be like a really good play here, but I'm not sure how I want to go about it. I think I want to do it in my Fidelity account and do a longer term position on it. Perhaps I could just buy one of the oil ETFs and just do it simple like that. But you think that $100 a barrel is going to be way more ridiculous than it was last time? I don't know if it will be like quote unquote more ridiculous, but the thing that I kind of see coming up here is that that's going to be like the main thing, right? When we had oil go off before, like there was a lot of other stuff going on because, we were recovering from the pandemic and the markets were already getting kind of zany because of that, and monetary policy and all of these things. We're kind of coming into a point where a lot of storylines are kind of resolving now at this point. Although the Ukraine war is still an evolving storyline, but the markets haven't cared about that one for a long time. There kind of sounds like there maybe are some developments happening in Ukraine, but it's not big enough for people to really take notice of yet. But, if with oil, this is like everything's kind of all hunky-dory, and then oil comes back. It's going to be like the only major thing that's going on. And so in that situation, I think that, yes, oil could be really dominant in the market action. I don't know about how crazy, I'm not necessarily saying that, oil is gonna, once they pop $100 a barrel, then it's up to like 150 or something like that. In fact, I actually think that the rise, or at least from the analyst reports that I've been getting, that the rise to $100 a barrel will be quite slow and steady. So I don't know if that's why I'm saying I don't think it will necessarily be ridiculous. But I am really concerned that, like, beginning of next year, oil will be like the only thing that matters. Oil has monthly expirations. You have to see. So, looking at the market right now, like what are the current conditions? I don't see a very strong liquidity hole going on. I am getting a little bit of hints of it, and it is kind of ranging, but this kind of looks more like a market that they've just kind of left. Like they did the move and they're not really that interested in trading it. Now, we are supposed to have a Fed speaker at the top of the hour, so that may be why they're just kind of sitting here. So when I see it like kind of heading back up towards those highs, I'm not really seeing pressure as of yet. So I'm a little bit suspicious of it when it's coming up here. Like I'm not chomping at the bit to try and take a trade on this, like as she goes sort of a thing. Doesn't seem to be. I'm just not seeing those signs that of like the pressure that, like, you know, a bunch of people are getting really stressed out and yada yada yada. I think they're waiting. Also, in the first 15 minutes, the S&P 500 has traded back up to 4450. So I guess that means that this kind of situation that I was looking at, where I was saying, you know, we might be moving into negative gamma territory, I guess not yet. Looks like we're still in positive gamma territory where we get pinned to 4450. So, Brent on Twitter, Brannigan Barrett is somebody that I've always enjoyed reading their market analysis. But every time that I see him tweet these days, it's about this Tradello application that I have zero interest in. And it's getting annoying to me. Oh, I missed a tweet from Nick Timmerhouse, though. Chicago Fed Research Fed rate increases have already taken substantial effect on output, but the majority of the effects have yet to occur for the labor market. The model says the Fed has done enough to bring inflation to target by 2024 while avoiding a recession. Seems a little bit convenient, doesn't it? Fed tightening to date accumulates to a decline of 5.4 pp in real GDP level and 7.1 pp in CPI level, corresponding to 65% and 75% respectively of total tightening that is estimated to occur. Policy tightening has reduced hours worked by 4 pp or 40% of total estimated effects. The more I trade, the more I see myself as Wile E. Coyote trying to catch the Roadrunner. You know, the thing with the Wile E. Coyote is, like, he always knows where the Roadrunner's going to come by, so he can set up a trap for it. How does he do that? And how can he be so good at predicting where the Roadrunner is going to go that his traps just never work? Anyways, I want to go back and return back to the conversation that we were having, though, because this is a really important piece to understand. Because it basically gives away, in my opinion, the whole game. Orders have strong impact. New orders coming into the market affect the market more than we realize. It's so much so that they just cancel out everything else that you see. So yeah, there are very strong empirical properties about markets. It's kind of interesting that they don't necessarily tell you a directional, you know, you should go long in this direction in this situation. It's interesting that they aren't like that. They're much more limited, okay? But they are there, and they can kind of help guide you. But they are just nothing compared to the new orders coming in. So at the end of the day, like, trying to premise your trade on something else is just silly, in my opinion. You have to have something that tells you there's future orders coming through here. And anything else is trivial in comparison. No, so there are 5 really strong, well-proven behaviors of order flow. Actually, there's more than 5, but there's 5 that I've kind of focused in on that you will see, okay? The first one is that there is a strong autocorrelation in whether the market orders are buy or sells. So the statistics that they always cite, and I know this seems like a really small statistic, but it's actually very significant, is if you go and you just at any given time look at an order and say, is this order buy or sell? And then an hour later, pick another random order. You know, if it's buy, there's a 0.5% chance that in an hour it will be a buy. So the market has this long memory that persists over long periods of time. If the market orders are buying now, they're likely to be buying an hour from now. Now, why does that happen? Of course, there can be different theories, I guess, but the thing that matches up best with what we see in the markets, the research suggests right now, is that it's caused by large meta orders. People are coming in and trading, and they need to trade so much more than what the available liquidity is that they have to split that order up across time, and it takes them all day, if not multiple days, to execute that trade. And so that's why you see such strong autocorrelation in the sign of orders, whether the market orders are buy or sell. Okay, that's the first, and that's the biggest one. Oh my gosh, I didn't turn off this freaking speakers. The second one is the square root law. So the square root law says that if you have a large meta order and it's 1,000 contracts and it moves at, X amount, if you do, so let's say Q. So if you have Q, that's the size of your meta order, okay? And Q gives you impact I, okay? Then you would think that 2Q would give you double the impact of I, but it doesn't actually. It gives you 2Q gives you 1.5 I, actually. Okay. Why is that? Because it follows the square root law. So the change in price is actually equal to the average volatility. Oh, wait, oops. There's another one before that. Y, which is a scaling factor for the individual instrument. Omega times the square root of Q over V. V being the average volume during that time period, and omega being the average volatility during that period. So you can look at like, okay, how much does this asset move per day? For instance, how much volume is there per day? Then if I put in a Q, and then you sort out your meta order, and you can use this to estimate how much you will move the instrument by trading it. Okay, and so you get a graph like this, which means at first it seems linear, but then as it goes along, you realize that the meta order is getting larger and larger and larger, but it isn't actually having much more impact on the instrument. Okay, it's a square root law. Okay, the next one is the inverse sine law, which is that if I have a large meta order that follows another large meta order of the opposite sign. So first meta order is buy and the second meta order is a sell. The second meta order will have more impact. It'll be like that. Okay. that's why you got to watch for reversals. And that happens because this meta order kind of leaves a wake behind it that makes it easier for us to sweep back through. There's less liquidity when you come back through the other way, okay? The other one is going to be... Yeah, that was terrible. The other one is going to be the post-meta order regime change decay. So after you have a meta order like that, you'll get this regime change that follows the 3/5 law, which basically most of the time comes out to be about 45 minutes. It'll take 45 minutes for the market to recover. So what happens is they will wait for this impact to completely come away, and then the liquidity should be balanced and so forth, and then they have the opportunity to go for another leg. Okay. Now, why does this happen? This happens because of liquidity holes. Essentially, too much trading in one spot or us moving through a spot or whatever will kind of scare the liquidity providers, and you will get an area of low latent liquidity. And it has to be latent liquidity because, traders and liquidity providers, they don't necessarily want to show their intentions with resting orders to you. And so often they only show up when it's about to trade. So you kind of have to watch how much trades over time in an area. Okay. But low latent liquidity kind of becomes a gravitational hole, if you will, that will pull price back towards it until that liquidity hole is filled. And that's why you will get these periods where it will just go back and forth across one single price for 45 minutes in the treasuries, and it seems like it just goes nowhere. So liquidity holes become really good places to take profits, right? I want to get in before it gets moving. When I start to see the liquidity hole form, I take my profits there, unless I think really strongly that there's going to be another leg and I'm willing to sit through the pullback and all of that. But it's a good idea to take the exit when the liquidity hole forms, because it's not going to go anywhere after that. So why have the risk of being in the trade and take all of the drama on all of that? Plus, there's going to be, it's going to go back and forth across that price many, many times. So you should be able to get a pretty easy fill in that location. So there won't be a whole lot. You won't have to wait in line very much, but you'll still have a really good chance of getting filled. So they become very good places to take profits. Okay. So I think that was 5. Okay, those are the stylized behaviors of order flow. Now there's a couple of other ones that I don't talk about as much, but they are there. For instance, one that's really, really interesting to me is when you look at the best bid or best offer, like 24.5 right here. Okay, there's best bid. There's a certain number of orders that are going to be stacking. Like if you look at on a minute basis, right, there's going to be a certain amount of orders that stack, and there's going to be a certain number of orders that pull, right? And if a lot of orders stack, the more orders that are stacked on there, the more orders there are to pull. Isn't that interesting? But the bigger it is, that the more likely you are to be having orders that are pulling off. Okay. And so because of that dynamic, there's kind of like these strange like equilibrium points. Okay. So you can think of it like this, where it's like, 550, 900, 1300, 2000. So that's why when you come over here and you look at this, you'll see the best bid or best offer stabilized to certain amounts over and over again. It's because of this thing. That one doesn't help you so much, but it is something that happens. Right. Another thing that happens is that there is more liquidity placed at round numbers. So a price like 110 even, you're likely to see more liquidity at that place. 24.16. Or when you're coming over to the S&P 500, 44.50. I don't think that it's any mistake that they got up to 44.50 and then reversed. There's gonna be some liquidity there that will make it difficult for them to get through. There's more liquidity around numbers. Those are some of the ones that I don't talk about as much. Okay. So that's the interesting thing about it is these are real empirical behaviors, and you note that the things that I'm talking about are not like, okay, you know, when this certain pattern happens, we're likely to move up or down based off of that. No. But they are stylized behaviors that you will see in the order flow, that you can detect when they are happening on the DOM, and that you will see consistently, always. Right? If you see a large move, you should see that square root law every time, because it's an empirical property of the market created by the rules of the system, right? They're caused by the market microstructure. Market microstructure being the rules of the game, right? But the problem is that orders have strong impact. Like everything that we've just learned can be explained by that orders have strong impact. You know, a lot of orders trading at a certain spot actually can exhaust the liquidity in a location actually pretty easily, and so that square root law happens very easily. Which means that to make any kind of prediction about what the market is going to do on the kind of time frames that we trade, you have to be able to predict the future orders. Just nothing else comes even close to being as important. These other things, you know, they happen. They're important to see what are the conditions of the market, what's going on right now, being able to have enough context to possibly predict what the future orders are going to be, but nothing will make up for not knowing what the future orders are going to be. If you think that the future orders are going to be long, and it turns out that for some reason that you didn't expect, they sold it, then you're going to lose. You're going to lose. You just are. Like nothing will make up for you not making that prediction correctly. So it's not that there aren't stylized behaviors and edges outside of that. It's just they are minuscule compared to any kind of predictor of order flow that you might have. How come you're not a billionaire already? Well, so the interesting thing about it is that there's so many things that we can know about the markets, and they still only help you so much, right? So the things that I talked about, if you worked for a large bank, right, where you have the fastest connections and access to a ton of capital and things like that, then you can definitely make millions of dollars from it, okay? But I don't have that kind of infrastructure, right? But I'm doing okay. We'll just say I'm doing okay. Of course, you know, it's because I have a really good day job. And hey, you know, I think that my trading hasn't been too bad. I definitely still make mistakes. I think I screwed things up in September a lot, but I still think we're on a fairly good path. The last few trades have been good. I think that I'm still, you know, I don't have the same kind of benders that I used to. I'm able to like adjust into the new market a lot better. The future of bond markets are going to be bleak. Well, the future of bond markets, if we come into a low volatility regime, all trading is going to suck. Okay. And we're probably going to have to I'm going to have to make some big adjustments if we move back into that low volatility regime, because I'm primarily looking for large meta orders and trends to ride. And if we move into a market where you're just never getting those kinds of trends, then it's definitely going to be difficult for me. Okay, now, Uzi is saying unless you count for the timing variable, still people are still going to lose money. So I think that some of what we had shared there does help you with timing, though, a little bit. Okay, because one, we can see when the liquidity holes formed, and so we can be a lot more accurate than we would otherwise be around if another leg is coming when we could take the trade from it. Also, since we know that it's those large meta orders and so forth, we can kind of look at what things are happening that day, what kind of news events are scheduled and so forth, to possibly predict what times such a meta order may actually start based on that. And we can also, using the current liquidity conditions, identify points at which it might be more advantageous for us to trade. So yes, Fed's Harker is live right now. My news squawk said that they have his speech and he does not comment on the economy or monetary policy. So that means that Harker is probably a non-event. You're amazed at the wall at 28.5? They did trade a pretty big iceberg at 28 before, didn't they? Although it also seems to me like they're very reluctant to hit above 28. Like, it seems like that whoever's buying is saying that, like, well, I don't really have to take out this liquidity right here. If I just back off, it'll come back and I can just trade it here. Yep, it's like they get up and they just stop. So it does create quite a wall. But you just got to be careful with those, because again, it's like, man, I got to tell you, especially in the treasuries, I think that's one of the benefits of trading the treasuries, is that the treasury is so efficient that, all of these sort of technical analysis setups that people think they see, the treasury will teach you very, very quickly that they're just not very effective. They'll create a strong ledge there at 28 so that everybody thinks, okay, that's where resistance is. This is where we want to go short. And then they'll just blow right through it. I was rereading that comment by GWE about why you're not a billionaire already. The other thing that I have to say is that even if you're a really, really great trader, the rewards for you in scalping, in day trading, is not actually as great as people have led you to believe. So if you have a big wad, you can certainly make a living from doing it, but very, very few people actually do that, right? The people that are making big mondo money out there are the ones that are YOLOing on options and that sort of a thing. What we're doing is kind of more, you just get a small consistent profit and something so that you can do it every day and practice, and not necessarily something that's going to make you a millionaire. So if you're looking to be a millionaire, I would recommend looking for a different hobby. If you're going to come in and trade in the style that we do here, you kind of have to be somebody that's intrinsically motivated, that you enjoy doing it for the joy of doing it and getting better at it, and not necessarily because you think that it's going to make you rich or bring you social status. I've been doing this longer than anybody, really. Been live trading since basically you could do it. Since it was available on YouTube. And, many people have like broken out and, caught big audiences and so forth. And the way that this is set up, that's a lot less likely to happen. Doesn't bring you the prestige because it's not flashy. It's not what people want to see. People don't want to hear that. Oh yes, I can tell you something about the market that happens that's very, very consistent, and it tells you that the market's not going to go anywhere for 45 minutes. Well, how does that help me? Right? Oh, there's definitely people that have been trading longer than me. I was talking about YouTube. Okay, how come you can easily trade 100 contracts in ZN? Okay, but to trade 100 contracts in ZN, you would need $50,000 in margin. If you have $50,000 just sitting around, why would you be day trading? That doesn't make sense to me. What person that has $50,000 just sitting around says, okay, I want to dedicate my life to sitting in front of a screen and trading? Like, it just doesn't happen, right? How did you get $50,000 to begin with, right? Person that has that amount of excess capital around is probably too busy. Probably too busy with his business that he made his money from to become a trader. That's why. Of course, every once in a while you get somebody that just sizes up and they keep trading and then it can't happen. But I'm just telling you, there's a handful of people. If I had $50,000 extra, I would be putting it towards my hedge fund and not necessarily trading micro treasury yield futures with it. You started with 10K? Well, that's not bad. I remember when you had dogs running around. What do you... I have 2 dogs now, by the way. I told you about the new dog, right? Oh my gosh, guys, we got to talk about the new dog. I've been, this morning I was like, dude, we've got to talk about this, okay? So, like, we used to have 2 Yorkies, and the one we knew was going to die soon, but, like, after he went, the other one went really quickly. Like, her health just went really, really poorly. So I thought, oh, we'd buy the new dog, and then we'd have some time before, Sadie died. She was like a teddy bear Yorkie. And, yeah. So, we got the new dog. We got Goku, who was a Papillon. The butterfly ears. And when we named him, we had a vote. Everybody put names up, and then we all voted. You got to vote for 2, and then we had like multiple rounds, and Goku won because that's the way the voting works. Is that it's kind of like the most acceptable option, and so Goku was like everybody's second pick, but not anybody's first pick, and it was an intentional lesson. I kind of figured that would happen, and everybody was upset about it, but I was like, this is how democracy works. Now you understand. And it was a lesson. Okay. So ever since we got Goku, though, he likes to play a lot. He's not, you can pet him, but usually if you start petting him, he thinks that you're trying to play with him and he starts biting you. Right? He's like that. He wants to play all the time. It is so annoying sometimes. She wants a dog that will just sit and cuddle with her. So she'd been talking about it for months and months and months, and I keep trying to convince her out of it. And eventually she was like, okay, there's this dog. It's only $300. We're going to go get it. Okay, well, I said you could get one, and we can afford it, so it's fine. So we go and we get this dog, okay? So here's the dog. Oh, wait, that's not a very good picture. Hold on. Is there a better picture? No, I'm sorry. That's the best picture I have of her right now. So you can just see... Yeah, I totally ignored the suggestion of naming him Lord Mountbatten. Okay, so here's the new dog. It's a girl. She has white and brown hair. She's some sort of Maltese Shih Tzu mix. So it's just a mutt. But she's brown and white. Okay. So the first recommendation was, well, if one dog is named Goku, then Goku's wife is Chi-Chi, so we should name her Chi-Chi. But, you know, I don't know if he's really her wife. So, like, she's kind of a kid. He treats her like a kid. He's actually not that interested in her, but they've been playing. So, she wanted to name it Coco... what was it? Coco something stupid. I was like, nah, you don't need... That's what people that, like, don't really care about dogs and just somehow ended up with it one day... That's, you know, and you just had to come up with a name and you name it Coco. That's just way too common of a dog name. Okay, so guess what they've settled on now? They want to name her Bella, like Isabella, but they want to call her Bella. I'm like, why don't you just name her Basic White Chick? Like, literally, like who is Bella? Right? Just the most popular character named Bella. It's the girl from the Twilight series, right? It's basically the most basic white chick that the author could possibly invent, so that all of the white chicks reading the book could insert themselves into her place. Right? That's what I think of when I think Bella, right? But the problem is I don't have a better name. So I need like an actual real solid name for a brown and white dog that's cute and likes to and likes to cuddle with you. So that she doesn't have to live life as a Bella. Oh man. Ugh. I'm kind of curious. I would say that the treasuries here are exhibiting a little bit more volatility than I would expect, but it's still a pretty tight range here. But the more I'm looking at this, the more I'm kind of thinking that I'm not sure it's going to go anywhere. And tomorrow is a no news Friday? I think one of the other suggestions they had was cookie. I guess that'd be okay, but... FOMC member bar speaks, final wholesale inventories, consumer credit later in the day. Camilla? Camilla sounds like a entitled rich person's name. Isn't Camilla that was the name of the woman that Prince Charles cheated on Diana with? Camilla. I need to get a better picture of her, but... Umbrella wait, what? No, we don't want it to be Bella anything. Oh, you know what? 8086 sent me this picture and I never went back and looked at it. But it was basically, he was saying, why is liquidity so concentrated? It was basically asking, why is there like 1602 and 1534 in the micro treasury yield futures? That is because there's basically a market maker sitting there and saying, based on what the bond yields are in the cash market, these are the best prices for me to put liquidity at. So that almost never trades. The only time that would ever trade is like if there was like some breaking news or something and it swept through there or something like that. But it's just there, I guess. I at least that's my theory about what that's all about. I'm looking around at the other markets to see. I am noticing that, well, gold reversed back up with the treasuries. Gold is pushing back towards its lows. Whereas the treasuries are just kind of, just kind of settled back at the open. So it does not look good for gold. If we were going to have a quote unquote hard landing, I think that's one of the things that makes me lean towards that the market believes there's going to be a soft landing, right? Like, remember when the jobs numbers came out on Friday and I was like, well, this doesn't mean that we're going into a recession. Actually, it means that we're more likely to get a soft landing. Well, one of the main reasons why I think that is because gold keeps selling. If we were going to have a hard landing in a recession, then I think that gold would do really well. So it could be like dead wrong. Watch, now that I say this, it's going to be like gold is going to perform terribly during a recession. But I would expect gold to outperform if we were to have a recession this year. But it hasn't been. It keeps going down, and that suggests to me that they don't think that's going to happen. To go short, I don't see any trades here at this time. Well, the one thing that I'm still interested in is oil. I'm just not sure what my game plan with that should be. Maybe if we open the chart up over here, it'll become more clear to me. Just been on a tear, man. I really hate buying things that are already on a really strong trend. But on long time frames, that probably doesn't matter. In oil, it probably doesn't matter. Because I'm thinking like I could probably buy anywhere below 90 and possibly get $100 barrel. But it might take me a long time. And then the thing is that, like, 10 divided by 90 is what, 11% gain? I guess if I just bought into with my cash that I have right now, if I just bought in, that would be a good win. But it'd be like $100, like, doesn't seem like the best play. Oh, I missed this tweet from Jim Iorio. We are in the final stages of the countdown till Elizabeth Warren begins to aggressively excoriate oil companies for their obvious greed in raising gas prices. And half the drones out there will think she's right. Definitely will be like trying to blame the oil companies rather than Joe Biden. I think this ban of Apple devices and the government is also a bigger deal than we probably realize. Yeah, I don't know. So here's another tweet. Brannigan Barrett, this is why journalists are clueless. The rates curve hardly budged yesterday. It was the long end of the curve that got hit. The reason is because markets are convinced the Fed is done and they instead will opt for higher rates for longer, which will create stagflation. I wouldn't say that the curve hardly budged yesterday, but the market definitely does seem to be forming a range between 4.1 and 4.3, and they do seem to be making the calculation that they're just, they're just going to keep rates where they are. I would say that volatility in bonds are still relatively high. Actually, let's go look at that. Move. I think it's move. Yeah. PVC. Okay. Well, so volatility is still relatively high for the bonds relative to like the past history. But it's definitely the lower end of this. And it would certainly threaten to come down this way. I didn't get nearly as many suggestions on the dog name as I was hoping. The other reason why I don't like the name Bella is because that was the name of that frog on the Magic School Bus. You remember that episode? And that's all I can just hear, that Bella in my head over and over again. No, I don't think that I want that name. Let's ask ChatGPT. Suggest names for a brown and white female Maltese Shih Tzu mixed dog. Okay, ChatGPT says, certainly. Okay, it's taking her a little while. She even knew how to spell Shih Tzu because I misspelled it. My gosh. Oh my gosh. Okay, so like the first recommendation that ChatGPT gives me is Coco. Number 2, Mocha. I'm not into coffee, so I'm not going to name it Mocha. Number 3, Bella. My gosh. How does it know? Has my family been conditioned into choosing those names? That's what it is. We've been brainwashed. I like Daisy. Daisy's not bad. Sophie. Chloe, honey. Bonnie. Pebbles. What? Wendy Testaburger. She-Hulk. Okay, I'm going to ask ChatGPT if it can give me names that are less common. Okay, the names that it gave me, I was like, who names their dog Biscotti? Pippin. No, Pippin's a common dog name too. Come on. S'more. S'more wouldn't be bad, but Marmalade? What? Marmalade. Pudding. Nougat. I've got to pick a name that I can go all in on, you know? Okay, give me more unique names that aren't based on food. Nimbus, what the Zephyr, Seraphina, Nimbus, Saffron, Dahlia, Larkspur, Nala, Sonata, Ember, Aurora, Tinsel, Sable, Pandora, Mistletoe, Oceana, Marigold, Valencia, Celestia, Zephyra, Sonata. Do any of you know? We just call this the note. I don't think I call my dog Note. Although it could totally work. I could have I could have named one Bond and one Note. And then I could get a third dog and name it Bill. Bob. Yeah. Bob or Knob. Yeah. Well, we finished the playlist. And when they go on each other, you could call it fight. You know what? I think that would be a better, if I was a cat person, if I was ever able to get Sphinx cats, I don't think that I would get a Sphinx cat with the bird. But if all the bird and the dogs died, then maybe I could get Sphinx cats. Because apparently Sphinx cats, when they play with each other, they like slap each other and you can hear them slapping each other because it's like skin on skin. And then, yes, then you could call them fight. It's a little bit, I find it interesting here in the treasuries that, like, I keep seeing it, like, just kind of looks dead to me. But then it's towards the higher end of the range here in the 10-year, and when it does that, it really makes me think that it wants to move higher. That you've got like this pressure, and it's just, I don't think that it actually does. There you go. Okay, ChatGPT thinks that we should name the dog Lexi. Lexi, Mia, Zoe, Ruby, Lily, Bella, Coco, Daisy, Abby, Rosie, Lulu, Tia, Pixie, Luna, Ivy, Zoe, Ruby, Ellie, Mimi, and Patney. Okay, these are better names. These are actual human names, but... But look at ZB, it's, yeah. Well, so, I mean, that's kind of makes it even more interesting, though. It's like, if not confusing, if we come over to the charts. So, like, originally, we saw the yield curve flatten substantially. And so when things came back, the ZB, like, really came back aggressively relative to the 10-year. But since then, that has reversed. All of the steepening came back out. And so that has resulted in ZB pulling back from its highs more than the others. But like here again, when I look at the cumulative delta, I mean, there's a little bit. There's about 5,000 net contracts through this range in ZN, but that's not that significant. And it's actually selling in the 5-year. So I'm just not seeing the flows that would make me say, oh yeah, this is going to break the high in trend or something. You know, like if it does break the high, I'm betting that it would be very brief. You know? But we're more likely to just kind of settle around here between 26 and 25. Legacy would be a good name for a three-leg... No. No, Lex... L-E-X-I-E, not... I'm gonna ask ChatGPT about Coco and Bella. Okay, I asked ChatGPT. What says this may violate our policy. Please submit your review. I don't know. We'll see. Okay. Bella and Coco have become common dog names for a few reasons. Oh, now I think that ChatGPT is just BSing me, but let's see what it says. Popularity in human names. Both Bella and Coco are names that have been popular for humans as well. Many people choose names for their dogs that they find aesthetically pleasing or that have a personal connection. Simplicity and pronunciation. Short names like Bella and Coco are easy to pronounce. They often consist of syllables that are easy for dogs to recognize and respond to. This simplicity can make them practical choices for dog names. Cultural references. Sometimes names like Coco might be chosen for dogs with brown or chocolate covered fur, as it can be reminiscent of Coco. Bella means beautiful in Italian, and many people find it fitting for their adorable pets. The influence of media and celebrity pets. Popular dog names can also be influenced by movies, TV shows, and celebrity pets. If a character or celebrity pet has a particular name, it can become trendy. It's important to remember that dog names are a matter of personal preference, and what one person finds appealing, another person may not. Ultimately, the best dog name is one that you and your dog feel comfortable with and that suits your dog's personality. If you prefer less common or unique names, that's perfectly fine, and there are plenty of options to choose from to find the perfect name for your pet. What would you name a relaxed and cuddly dog? Snuggles, serenity, chill, calm, cozy, harmony, tranquil, hug bug, pudding. Zen. I kind of like pudding. Maybe I should go all in on pudding. It's like it's just so hard for me to watch something that's like only 2 ticks from the high and not want to get involved. Cozy too. Cozy could work. There's the high. In fact, they traded the high in ZN. We are getting that. We are getting some of that flow along in the 30 years. So it seems to be coming from the yen. In fact, the yen has kind of been trending up quite a bit before the treasuries started to follow it. Oh, we can't do cozy. That's taken. Boo. She thinks Lexi is cute. You are a white person namer for... Yes. They name them after real human names, yes. How about naming her something dangerous like Red Scare? What? So you know the funniest, not the funniest thing about all of this, but the thing is, apparently my wife's dream dog is not this. Apparently her dream dog is a Rottweiler. Like a German Rottweiler with that are like really bulky and like, you know, really frumpy skin. She for some reason she thinks those are just the cutest things ever. Let's go. Well, the 6J is pulling back a little bit here. I really hate it when this is kind of going on, just because when you get a currency move, like currency moves can keep going and will keep pushing us, but I don't know enough about what's going on in the Japanese yen to understand why we might be getting a flow long at this time over there, you know? Plus, the time of it is a little bit suspicious. Not suspicious, but just not very favorable to me, I guess you could say. Anyways, a Rottweiler would be, I think, too big of a dog to get right now. Maybe we get 3 dogs at some point. I feel like if I lived out in the country or had like a really big yard, then it would be nice to have a dog like a Rottweiler, and then I could name it something super scary. I want a break and to squeeze 2 evens. I don't think you're the only one, though, Mr. Bond. I think that's kind of part of the problem. Like, especially in the Bond, there are a lot of contracts having bought through this area, but they're not really getting paid for taking the risk. Now, I don't think that those are just retail traders trading it, though. I think there is a slight bit of buying today. It's just that the current conditions are that the buying is pretty tepid and the liquidity above us is pretty solid. So it'll take a lot of orders to get to 110 even, I think. That doesn't mean that they can't do it. It's just that at the moment, I haven't seen anything to suggest that there's that much demand for it. That last little kind of pullback, though, is it seems kind of more like noise to me. So I'm not going to read too much into that yet. If we were back at like 26, then I would be like, I don't know if it's happening. But that one is just kind of like okay, it's not happening this time. Let's let it pull back again, and then we'll try again. Right? They'll do that often if they're trying to make a breach. You know, they'll come up there, let it sit there. Nobody takes it, let it come back, push it back up again. You know, kind of like the ascending triangle kind of pattern. Until they get the pressure and the people buy through it. Do you know any good free source of historical data for futures like bid ask, uptick, downtick volume? No. The best source of historical data is to write indicators and record/save it yourself. Actually, I do have somebody gave me a data set that was basically like every trade ever in ES. But it was not cheap for them to get it. And I don't remember where they got it from. Nah, it's still kind of acting like this is all just random. You know what? I have not messed around with ChatGPT in a while. I don't know why that is. I saw this creator the other day, and they were like, people are 40% more productive when they use ChatGPT. And I've kind of been like, I don't know, every time that I ask ChatGPT something important, it doesn't help me. It doesn't know what it's doing. Like for code, it just doesn't write good code. What's Greg saying here? It's unfashionable to tie inflation to the labor market, but I'll do it anyways. The rise in unemployment in August is an important sign that slack is returning to the economy. I agree. Crucial step to getting and keeping inflation down. You can dissect the labor data in ways to tell almost any story. I like taking the unemployment rate at face value, ignoring its underlying composition. When it's rising, the economy is growing below trend. Of course, GDP at 2%, 3% SAAR currently is above trend, but GDI and revisions data make me think that that's overstated. Critics say, wait, wages don't explain inflation's up and down slightly. True, but neither that nor the flatness of the Phillips curve means the labor market is irrelevant for inflation outcomes. In fact, it's hard to build a coherent model of inflation without wages or unemployment. Lots of idiosyncratic factors push headline inflation up and down, but in the long run, underlying inflation equals the difference between real output and nominal incomes, and wages are crucial to the latter. Almost time for me to get going. So I'm kind of like thinking back on our stream today, and I kind of feel bad about not having traded, just because I was late for starters, and I've really got to figure out what to do about getting ready a little bit faster and food and everything. But you know, I could have made the call that it was going to reverse, but at the time I thought it was a little weird. I couldn't explain it. No, I definitely couldn't explain it. I probably could have justified getting into a position on the order flow in the 30-year. I guess I didn't see that until it was too late. I for some reason I feel like I should have taken a trade, but when I go back through it, it seems like I did the correct thing for my strategies. So I do find it a little weird though. Like, that was a good jobless claims report, and I'm not quite sure why the market is kind of like saying, like, reversing off of that. Maybe it was just that they needed to buy today. McCarthy faces a House revolt over Biden's latest multi-billion slush fund for Ukraine stonewalled impeachment inquiry. Lee set to become a major hurricane with possible New England and or Atlantic Canada track. Ooh. And there's a chance that it could be a Category 5. Yes, but isn't there also a chance that it just kind of turns around in the ocean and never makes landfall? Higher for longer's day of reckoning is coming. Recession shock power is amplified by the fact that typically economic and market expectations are most wrong when they occur. Here's what we needed to learn. After dropping to year-to-date lows last week, despite payrolls data showing a weakening labor market, initial jobless claims were expected to rebound modestly in the latest data, but they didn't. Whatever magic they are using pushed the seasonally adjusted initial claims data to its lows since February. The non-seasonally adjusted claims to their lows since October 2022. But once again, we think it's important to remember that two distortions that likely boosted initial claims over the last few months. Potentially fraudulent filings in Ohio and expanded eligibility for unemployment insurance in Minnesota, and that has begun to unwind in recent weeks. In fact, for the third week in a row, Ohio saw the biggest decline. Claims as fraud was erased. Continuing jobless claims also plunged last week back below 1.7 million to 1.679, equal to the lowest level since January. At the same time, employment cost growth for Q2 are revised higher. As a reminder, the unemployment rate is now at its highest since the February of 2022. Do you believe it? No, I don't think that there's anything that unusual about these numbers, to be honest with you. Zero hedge. I have an idea for trading futures, but it works great on 1 month of data. Well, try 5 years, my friend. You know what? It's basically gotten to the point where I don't run a back test unless it's 5 years. The only time I would run it less than 5 years is if it's taking a really long time for me to trade 5 years and I'm like debugging this strategy. Otherwise, I just don't think that 1 month's worth of data tells you a whole lot. Oh, you don't have the data. Well, is it? It's not order flow based, is it? Because if your trade is just, if it's your typical change in price kind of setup, I'd be really surprised that they don't give you 5 years of data. But then at that point, if it's a Ninja Trader, you could just give it to me and I can run it because I can run on 10 years. Like it did in that volume profile video. But I went through that one so many times, man. It was like I would watch something for a month. This was one thing that I think I got this idea from Peter at Jigsaw, and I think this was the worst piece of advice he had given me was like, watch the market for a month and keep a journal of it, and then based on any kind of statistical what you see in the statistics on it, and then you trade off of that. And I very quickly realized that 1 month is just not enough. It's based on the bid/ask and uptick downtick. Yeah, that would be hard to trade. That would be hard to backtest. Well, so here's the other way of approaching it, okay? If I have a stylized behavior, like there's a study out there, or I have some theory based on the way that the market is structured that a certain thing should be an edge. Not like I've noticed that it seems to turn out this way, but based on my understanding of the market, things should do this, right? And then I go and I program it and I run it. live, like run it live on a sim account for a month and it's performing according to my expectations, then that's a different thing, right? I have a real reason to think that, but it's crazy hard to actually find something like that, right? It's not, in my opinion, it's not really worth looking, but you've already started, you might as well finish, right? Nice stop run? Are you talking about them selling here in the treasuries? Apparently we got something coming here at the top of the hour that my news squawk is warning me about. However, I don't think it's enough. Yeah. Turn them in. Trading is super hard. I enjoy doing it, but just realize that what we're trying to do here as retail traders is to some extent kind of impossible. We're trying to achieve the impossible. So set your expectations accordingly. Maybe that was a stop. I tell you what, the 30-year just got like creamed there, man. Maybe somebody's puking on it's never gonna happen. I don't know. I don't know what I'm gonna call today's stream. It's time for me to get going, but we gotta put in a name. Jobless claims surprise is what today was. If I had more time, if I had more space, I would put more in it. Because today was basically like markets decline for a 5th day in a row as jobless claims surprise to the upside. But the S&P 500 may have found a floor. Can they pull out a bullish day? Find out. No. Yeah, anyways. Guys, I gotta get going. I'll see you tomorrow. Stay excellent, team.